Good morning, ladies and gentlemen. Welcome to this week's review. As always, we start with the bond market in the States and the volatile period we think has started. The 10-year note is making a nice move back up towards the highs around the 250 area. And if we break the 250, we think we will definitely break the 260 area sometimes in December, if not in November. If we look at it in terms of futures price, we will be breaking this 124 level and going back towards the lows around the 122.5 level. That is going to be very, very significant, and it will probably mean a bear steepening of the yield curve, which we've been waiting on for quite some time. It is very important that this should happen for there to be any hope of any kind of a pullback in equities, and we will see later on why that is so. As far as Europe is concerned, this is a chart of the 10-year Bund. We are unlikely to have as big a move as we have in the United States in the 10-year. We are likely to be for a few weeks between the 30 and 50 basis points range. A very tight range continues, which we think will break towards the end of the year and take us back up towards the 75 area. It is very unlikely that the market will hold around here for too much longer, simply because we all know that towards the end of 2018 we are going to have the end of QE, and we will likely anticipate that by taking yields towards at least the 75 basis points level. In terms of TLT, which is the most often traded by retail in terms of ETFs, we have this very important trend line which goes back all the way back to the lows made in 2011. That comes in around the 118.5 level, but before that we need to break 122.70 on a closing basis to give us a fighting chance of attacking this trend line, and then once we've broken that we can go a lot lower, probably around the 112 to 114 area. So not forgetting that we are now at 124, that is a massive move in terms of TLT, which cannot but have a medium-term effect on equities and all other asset prices. The divergence in performance last week between Europe, Japan, and all other markets and the United States is actually quite stark. We had the DAX give up all the gains of the week before when Draghi spoke, and now we are probably going to attack the 12,800 to 12,900 area. In terms of Nikkei, we had a key reversal, and on a dailies and on the weeklies we had a shooting star. So it would be reasonable to expect a test of at least the 0.38% retracement, with which is 21,770. So another couple of percentage points lower. Unreasonable to think that we get much more than that. And what did we get in the States? Well, we got a move which basically took us from the 90s back down to the 70s and is now stuck around 80. So we haven't even tested the lower Bollinger Band of the daily charts, which comes in at 2550. We are unlikely to be pushing for new highs next week. We are more likely at some stage to test this low around 65, and probably hold it or hold very close to it and trade back towards the 80s. The reason for this is quite obvious, and I will show it to you in the next charts. And here is the reason why the S&P just cannot go lower. While XLI and XLF and XLV, which are all major components, have managed to retrace last week, XLK, which is 30% or so of the S&P 500, closed absolutely unchanged. Every time it dipped, there were buyers, and you can see how XLK is actually in a parabolic trajectory against all other, compared to all other sectors of the market. It is just bid to old boots. Unless it could come back and even test the middle of the Bollinger Band around 62 and come back and trade 61.20 or 61 and fill this gap, we are likely to go much higher in XLK, and that will naturally drag everything higher with it. And this is a spread chart of XLK against the SPY. As you can see, it just keeps on making new highs as we anticipated. It does have resistance against this trend line, but it's not very strong. We anticipate that this, with minor pullbacks, will continue into year end, and this is a major trend. XLK is America. XLK is all that people really care about in the States. So this is basically a trend which is not worth fighting. In fact, it's a fundamental trend which makes perfect sense. This is a chart of XLK against XLF, so technology over financials. As we can see, we're about to break the highs of the year. That should take it at least another 4 or 5 percentage points higher, and therefore it seems unlikely for the time being that XLK will give up the ghost anytime soon. It is just too much in trend at the moment. The one chart everybody was getting very excited about last week was HYG, which is basically junk bonds, which made a substantial break lower. We would argue that that has very little to do with XLK, and really it's not going to have an impact on the other components of the S&P until we break at least the 8632 level, at least. If we did that, then we would probably, on a closing basis, then we will probably have an effect on things like XLI, XLE, and XLF. But until then, it is unlikely that that is going to happen. So we are not very excited by this break in credit, simply because if we have a look at what happens in terms of credit against treasuries, it is really not very significant. And here we have HYG over TLT. As you can see from last week's price action, was actually a wash. Nothing much happened. So basically HYG broke a little bit harder than TLT on the downside, but it's still not breaking any significant points. Only below here, 0.6618, will we think that that will impact on equities. At the moment, it is just not that significant, and that is why we didn't see much of a move in equities last week. In terms of whether we are in a risk on or a risk off environment, we are still very much in a risk on environment. the move that we had last week in XLP, XLY is actually very small, and all it's doing is correcting these very oversold levels. We're still in the downtrend channel, we're still below all the MAs, nothing really significant has happened there. And if we look at SPY over TLT, the other major risk on, risk off indicator, we can see that actually we are still in a very nice uptrend. We expect TLT to go down, therefore unless SPY makes a sudden jolt lower, this is likely to go higher. So still a risk on environment in which basically equities, although certain sectors are giving up, are supported by XLK, which is the largest sector. So it seems very reasonable to overweigh XLK against anything else. One divergence which has started to become quite apparent is that volatility is diverging from the price action in ES, and this is more of a harbinger of the last leg of a very overbought equity market doing silly things than anything else. We think we have broken the 200-day moving average, so from now on we shall definitely be better buyers of volatility on any dip in the this is the cash chart, so any dip towards the 1020 level or so, we will be buyers of futures volatility, and that is why we don't think the overall SPX has much room on the upside. We think it has more room on the downside, but every time it dips, it's going to be supported by XLK and buyers coming into XLK. Finally, our biases, we are still very much buyers of the 125 straddle. We think that that could go quite ballistic, or basically just buying puts, because we think that we will have a quite large move in the 10-year and 30-year bonds over the course of the next couple of months. We're beginning to see the measurable increase in volatility in ES. So we think that any kind of run up to 2610, because XLK forces it, is going to be a wonderful sell. Here NQ, which is the most akin to XLK, we could have some really euphoric action. We would not short this at all. Volatility, we are buyers. These are future levels around 11, so 1020 in the cash we think is going to be very, very interesting. And we still think that these super cycles are very much going to be in effect for a long time to come. XLK is going to be the one which people are going to make most money in by being long of it against SPY, and therefore this butterfly is still very much what we think is going to be a very profitable trade over the course of the next few years. Now, having said all that, XLK is so important that we will be looking for dips back towards 61 and that gap fill that I showed you earlier. If we cannot do that over the course of the next couple of weeks, it is more and more likely that it's just going to go parabolic into year end, i.e. there'll be a huge amount of money which will be put to work in XLK in the usual suspects of Amazon, Apple, Google, FANGs in general, semiconductors and things like that. That could be the final leg of the mania, which tells us that we are very close to an overall top. Thank you very much indeed, and tweet to you on Monday.